Hello, I'm live. Da, 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 da. All right.
I think this is your
And I don't think I'm loud enough, but I am.
story.
Hi, if you can see me, say hello. Thank you.
Mm-hmm.
No, this is Facebook. Okay, so how do you go live on?
I don't know.
All right, so I think I will go to camera,
Mm-hmm.
but I'm live on Facebook. So I just don't know the volume though. If the volume is fine, can you hear me? Okay, say, please type your response if you can hear me. How you doing today? Thank you for joining. Let me try to go live on Instagram. It still show that checking connection. Okay. So how do you flip it? All right.
You got it?
Yep. So I'm live on both Instagram and Facebook. Hi, how you doing today? I hope you are having a wonderful day. You don't have to be here, you know.
Oh, okay.
Yeah.
Okay.
Like if I have any questions, I would definitely let you know. You can hear me. Thank you, Alex. How are you? Thanks for joining. So I'm back this week with another Q&A section. My name is Bernice Atsan. If you are watching this live video for the first time and you don't know who I am, my name is Bernice Atsan. I'm a licensed CPA. We help so many people resolve their tax problems. I manage a tax resolution company here in Columbia, Maryland, where we help people resolve their tax problems. We help people negotiate, IRS with IRS. So if you have any questions as it relates to, payment plan, tax debt, taxes that you owe, please feel free to dial in. The number to dial is 443-741-4188. I will be glad to take your questions live and answer your questions. Any questions that you have, it really doesn't matter. As long as it's tax related, I will be more than happy to answer your question, okay? So I want to just, first of all, get started by talking about a few things that are very important as we are closing out the tax year. We are now in November. I hope that all of you guys have filed your tax return. Have you filed your taxes? If you are watching this, respond and let me know if you have filed your taxes for the year. For 2019, have you filed your taxes? Do you have any taxes that you hold that you do not know what to do or how to even go about it? So when you have outstanding taxes that you haven't paid, you will be getting lots of notices from the IRS, notice of intent to levy your bank account. You probably will get like series of letters before they levy you. I always tell people IRS just will not, levy your bank accounts. You would have received at least 4 to 5 notices before, IRS levy. By law, they have to notify you. The series, the different letters will have like sequence. So the letter sequence will have numbers on the letter, to tell you where you are in the game of collection. Okay, so the very first letter that you will receive will be CP11. That's the very first letter stating that, hey, you filed your taxes, we see that you hold taxes, you need to come up with a resolution. Okay, that's the very first notice that you will receive. If you can see me, say hello. Let me know where you're tuning in from. Today is another Q&A, like I said. If you have any questions as it relates to, tax problem resolution, IRS negotiation of taxes, back taxes that you hold that you don't know what to do, PPP loan forgiveness, SBA, feel free to dial. Our line is, I will be glad to answer your questions live. The number to call is 443-741-4188, okay? So before IRS could levy your bank account, you would have received at least 5 notices, and typically the last one will come in a certified mail. It's not like a regular package. You will get a certified mail notifying you that, oops. I just dropped my phone. Yeah, it's okay. I just dropped my phone. Can you see me? All right. So you would have received 5 different notices. They will send the CP11, CP14, CP503, CP504, and the last one that you will receive will be LT10/LT11. Okay, that is the final notice that you will receive before IRS could levy your bank account or garnish your paycheck. So, I always tell people, if you know that you have outstanding taxes that you don't know what to do or how to go about it, just file the tax return. Very important. Even if you don't have the money to pay, you want to file the taxes. File the tax return. There are so many advantages to why you need to file your taxes. I speak to so many people in my practice because we've represented hundreds of people by the IRS. And, majority of the common mistakes that I see is that people, they don't know where to start. They don't even know how to begin, okay? Just file the tax return. Even if you have 6 figures in taxes that you know that you're going to hold, but you don't have the money, you want to file. There are so many advantages to why people, why it's encouraged that you should file your taxes. When you file your tax return, the collection statute expiration date will start to run. Okay, we call it's a set date. For every tax assessment, there's a collection statute expiration date. It's usually 10 years from the date that your taxes is assessed. So let's say you filed your 2019 taxes last month, okay? So once IRS process the tax return and they assess the taxes, they have 10 years to collect. So if you file the tax return, the collection statute will continue to run. And, that will limit the number of years that IRS can collect after taxes that you owe. Okay, so that's one of the advantages of filing your taxes, even if you don't have the money to pay. The second advantage is that if you decided to file for bankruptcy, okay, bankruptcy has so many requirements that must be met before you could file the tax return. You have to file the taxes. It has to be more than 3 years old before you could get discharged. So, if you have multiple years of back taxes that you haven't filed, if you don't file that, you will not be able to get a discharge during bankruptcy. Okay, you see why it's very important for you to file your tax return. You have the opportunity to get your taxes expired, under the expired statute of limitation of 10 years. And you also have the chance to get a discharge during bankruptcy. There's a lot of mistakes that I see among people. They will have multi-years of taxes. They will even have the total. They will tell me the total amount of what they owe without filing the tax return. A lot of bankruptcy lawyers don't really communicate very well with their clients. I've seen it. I have so many clients that comes to me and, they are trying to weigh their options of resolution. They want to do bankruptcy. They want to file bankruptcy. And then when I start to analyze their case, I find out that they didn't file their tax return. Your tax return must be filed before you could get a discharge during bankruptcy. Okay? So, if you are just joining, let me know where you're tuning in from, okay? Like I said, you can call me if you have any questions. My line is open. I will be glad to answer any questions as it relates to your back taxes, outstanding taxes that you owe, IRS negotiation, payment plan, offer and compromise, PPP loan forgiveness, SBA loan. Just call and I would be glad to answer your questions, okay? I hope that I can stay on this live video for the next 20 minutes. So if you want to dial now and call in, I'll be glad to answer your questions, okay? So back to what I was saying regarding the outstanding taxes. So it's very important that you file your tax return, It has a lot of advantage to it. Don't just, sit on your tax problems. Even if you don't have the money to pay, go ahead and file the tax return. The collection statute expiration dates will continue to run and is amazing, okay? So I want to take some time to discuss also the options of tax resolution, okay? Because in my practice, you all know, I know you're not seeing me for the first time, but if you are, we help people resolve their tax problems, and I've, posted several settlements that we have gotten over the last few months. And, I would receive messages from people asking me, how did you do that? How is it even possible for you to negotiate 6 figures in taxes and settle for just 1,008? How is that possible? So I'm going to try to break it down to you today, step by step, of how that is possible, okay? Because there are so many fresh start initiatives available to help you resolve your tax problems. A lot of times when I talk to clients, they have no idea that these, initiatives are even available for them, or they don't even know what the requirements are. So my job is to try to educate, a lot of people, to let you guys know that, owing taxes or having tax problem is not the end of the world. There are so many fresh start initiatives available to you. You just need to know if you are qualified and what your options are, okay? So the one that we just submitted last week, okay, I think I have a call coming in. I don't know if this is for one of my callers, but I'm gonna pick it up. No, let me pick it up. What happened? Did you hang up? I don't know. It says hold. Okay, hello? Oh, I think I just hung up. Help me call her back, please. Yeah, so like I said, you can call in. If you have any questions, call in and I'll be glad to answer your questions. Okay, if you have any questions as it relates to taxes, payment plan, offer and compromise, PPP loan, feel free to call. The number to call is 443-741-4188. Okay, someone actually asked me what is the phone number to call. It's 443-741-4188. Okay, that's the landline to call. Is that call for me? Ume? Yeah. Is that for me or somebody else? Yeah, I just started. Yeah, I'm on Facebook. I'm also on Instagram as well. So yeah, so a lot of people, always, question why that is even possible to propose $1,800 to settle $232,000. But it is real. We do it all the time in my practice. So I'm going to kind of walk you through the requirements of how you can settle your taxes for less, okay? So there are several options of how you can settle your tax debt. There is offer and compromise, which is very common. When you get on the radio, a lot of times you will hear where people will say, hey, engage my company and we can help you save, pennies on a dollar deal. You have to be very careful with that. You have to be very, very careful because a lot of tax resolution companies, they promise things that they can't do, okay? Because before IRS could settle your taxes for less than what you owe, there are certain requirements that they will look at to see if you qualify. I mean, yes, these are fresh start initiatives, but it's not applicable to in all cases, So it is very important that you speak to someone that would analyze your case and determine what type of the resolution options will be suitable for your situation. Okay, so the very first one that I'm going to talk about is the offer and compromise. They call it OIC. How can what is an offer and compromise? Offer is when you propose an amount to the IRS to settle your taxes for less than what you owe. So let's say you have like 6 figures, like the one that we did last week. We submitted, the guy, is a self-employed business owner. He's been in business for so long. And of course, as self-employed, a lot of times people don't pay their taxes. They don't pay their quarterly taxes. So years after years, it adds up. So that's the situation with this client. He had about $235,000 in taxes because he didn't file He didn't pay his quarterly estimated taxes every quarter. So when it came to us, the very first thing that we did is to determine what is the best resolution options for him. Okay, so the very first option that I'm going to talk about is the OIC, which is the Offer and Compromise. Offer and Compromise is one of the Fresh Start initiatives that is available. IRS made it available, especially, to people who are struggling, that you cannot, meet your daily requirements financially. So what they will look at is so Offer and Compromise is an offer to the IRS to settle your taxes for less than what you owe. Okay, so for this particular client that we signed up last week, that we submitted his offer last week, he had a total outstanding balance of $232,000, and we are proposing $1,886. So an offer is when you offer an amount to settle your taxes. So when I mean settle, I mean it's gonna go away. You're proposing, hey, this is what I have, and I want you to just eliminate everything else. Okay, so the requirements for that, the very first thing that they will look at is two components. They will look at your income components and your assets, which is very, very important. I have a lot of clients that, they will call me and say, Bernice, you are amazing. A lot of people talk about, the things that you are doing for your clients. And I really want you to get me the same offer. And then I will start to ask them questions like, what is the fair market value of your home? Do you have equity in your home? And, their response would be, yeah, I'm a real estate agent. I have several properties with, equity in it. So, unfortunately, if you own a home with equity and your equity is higher than the amount that you owe, you are not going to be qualified, okay? Because those are the criteria that they look at. I mean, you are asking IRS to give you a deal when you have a home that is worth more than what you owe. I mean, does that even make sense? What they will tell you is go back and refinance your home and cash money out and pay us, okay? Or, I have had clients that when we talk to them, they have 401k, like they have money in their savings account. They have money in their 401k. I'm sorry to tell you, you cannot receive an offer and compromise if you have savings account equity that is higher than the amount your outstanding taxes. And that is the mistake that a lot of people make. You're a very beautiful lady. Thank you, Julie. I appreciate that. And that's the mistake that a lot of people make. They want an offer, they want to settle, but they have money in their savings account and they have equity in their home. I mean, it's not possible. You cannot ask for a deal when you are capable. So then you are capable of paying the money. Okay, so it's very important. They will look at the assets components. Your assets is, the cash that you have in your bank account. Your assets, meaning your house. What is the value of your house? Is your house worth more than your outstanding taxes? They're going to look at the assets components. Very, very important. Even your car. If you have a car that you have no car notes, and you can easily sell your car and pay them, that's also considered an asset. So they will look at the asset components of your analysis, and they will also look at the income, which is also very important. If on a monthly basis, you make money, you have household expenses like your rent, your mortgage, your food. Once you deduct your required and necessary expenses, whatever the disposable income that you have. So let's say on a monthly basis, you make $10,000. Okay, I'm just using that number. You make $10,000, and then your necessary and required expenses, that's the key. Because a lot of times people will say, Bernice, I have credit card debts. Is that also acceptable? No. Your personal credit card is not necessary and required expenses, okay, when it comes to an offer. They're going to look at expenses like your mortgage, which is very important because you have to live, your food, your household expenses, your car notes, your auto expenses. So once they take all those expenses out, whatever income that you have left is your disposable income. They will take that income and multiply that by the number of years that you have left before your taxes expire, which is the key. Which is why I mentioned that even if you don't have the money to pay your taxes, it is very important that you file. Just file the tax return. Let the collection statute expiration dates continue to run on your taxes. I had this guy that we helped, I believe it was last year. He had about $323,000 in taxes that he owed. And, the taxes, of course, comprise of multiple years of back taxes that he didn't pay. But the beauty of it was filing his taxes on time. When it was time for him to file, he filed the taxes. Even though he didn't have the money to pay, he filed. When it came to me and I did an investigation analysis on his case, I found out that in 9 months from the date that we met, almost $200 and something thousand was set to expire as a result of collection statute expiration dates. So, which is why it's very, very important that you file your taxes. Also, even if you are trying to do an offer and compromise, like you're trying to, settle your taxes for less than what you owe, they're going to look at what is the number of months that is left before your taxes expires. Because those are the factors that they look at. If IRS know that they still have 9 years to collect after taxes that you owe, the chances of you getting an offer is very, very low. Very, very low. So you want to take a look at, your set dates when they are calculating, especially your disposable income. So let's say on a monthly basis, you make $10,000 and then your required household expenses, like your rent, your mortgage, everything came up to about let's just say $990 dollars, and you only have $100 left. Let's just say every month after you pay all your bills and everything, you have $100 left in disposable income. During an offer and compromise analysis, IRS will take that amount and multiply by the number of months that you have left before your taxes expires. So let's say your tax, you have a tax return, taxes that you owe all the way back in 2000 and I'm just going to throw the time here for the sake of this conversation, all the way back in 2014, okay? And your expiration dates, 2014, the filing dates will be on April 2015. So your CSED will be 2025, right? So 2025, we are now in 2020. You submitted an offer and your monthly disposable income is $100. They would take 12 months times 5 years, right? Which is 60 months left. So you have 60 months left before your collection statute expiration date expires. Your CSED date, you have 60 months. They will take the 60 months and multiply that by your monthly disposable. That's the key word. Not your monthly income, your monthly disposable income. So if your disposable income, in this case, I said $100. So if you multiply $100 times, I wish I have my board. I'm sitting down today because I don't feel like standing up. So $100 times 60 months is $6,000. Okay, so $6,000 will be the total taxes that IRS know that they could collect based on your set income at the moment. So when it comes to an offer, they don't care about what your income will be for the next year or 2 years. All they care about is how much are you making now? How much can we possibly collect now, irrespective of the amount you owe? So if your monthly disposable income, is $6,000 and you have no assets, and we did the analysis, you have no 401k, no savings account, then your offer amount will be $6,000. That's how much I'm going to offer to settle. I don't care if it's 6 figures in taxes, $300,000. It really doesn't matter. So it's very important that, whoever helping you to resolve your tax problem, do this analysis. Don't fall for the the scam going out there that, you know, I can help just anybody settle their taxes for pennies. That's scam. You know, they have to qualify you. They have to see, because when IRS agents is reviewing your application, reviewing your financial analysis, these are the things that they're going to look for. They're going to look for how much do you have in assets? Do you have cash accounts in your bank? I said cash account in your bank. Do you have cash in the bank saved? Do you have savings account? Do you have checking account? They're going to look at your assets, you know, and also the income component. So those are the things that they look at when it comes to an offer. So if you are just tuning in, I'm talking about, you know, fresh start initiatives available to resolve your taxes. Okay, so, and this is for people that have huge balance on their tax and they don't know how to resolve it. You know, a lot of times we have clients that we have to help them resolve. I mean, the one that we recently signed up, he had about $865,000 in back taxes. He's been a medical doctor now for the past 20 years and he has not filed his tax return. So if you have like 70,000 or 80,000 and you think your situation is worse, it's not, because we have seen situations that are way worse than your case. So, but there is always a resolution to every problem. What you have to do is just do the right thing and take a step towards resolution. And the first step is to get those taxes filed if you have not. If you have back taxes that you know that you're going to owe so much, and you are sitting on it, you haven't filed, you are doing a lot of damage to yourself. Thank you. Thank you for joining. Hi, Mike. Hi. I see a lot of people are actually watching this live video. Like I said, if you have any questions as it relates to taxes, payment plan, IRS negotiation, you know, different tax resolution options, please feel free to call me. I don't like to talk to myself. I want this to be very interactive. If you don't want to call, you can drop a comment and I can you know, respond to that. But if you would like to call, you could call 443-741-4188. I have 10 more minutes because I have a 12:30 appointment. So I'll be glad to answer any questions as it relates to taxes. I mean, if you don't know who I am, my name is Bernice Atsan. If you are just watching me for the first time, I'm a licensed CPA. We help lots of real estate agents, self-employed individuals. We help them resolve their tax problems. We have represented so many clients by the IRS. You know, we help resolve their tax issues, because if you receive an IRS notice, it's very important that you talk to a professional. You know, that would help your situation. I do not encourage you to represent yourself by the IRS. I had this client who engaged my company to help him file his back year's taxes. We filed about 6 years worth of taxes for him. And when we did all the tax analysis, his total taxes was about $420,000. Of course, he retained us to resolve the taxes, to help him negotiate a settlement. But when we submitted the tax return, of course, we filed like 6 years at a time. When we submitted the tax return, 6 weeks later, he got a letter in the mail. He got audited because his 6 years worth of taxes, of course, he made so much money during those years. So they are questioning some of the expenses that he put on his tax return. When he called me to let me know that he received an audit notice, I encouraged him that we can help him. But because of the costs, you know, he didn't want to engage my company to help him with the tax resolution. So he went ahead and did the audits by himself. Guess what? At the completion of the audits, he got almost $430,000 additional assessments on top of the $400,000 that he owed. Now he has almost $820,000 in taxes. So he was forced to now come back and retain us to help him. Don't be like that. If you receive an IRS notice, please don't ignore the notice. What you can do is you can schedule a consultation call with your CPA. If your CPA also, you know, do tax resolution, because you have to be careful. Not all CPAs represent clients by the IRS because they just don't want to deal with it. So you want to engage someone that what they really do is just resolution and nothing else. Okay? You have to engage someone who deal with the IRS on a regular basis and who can help you and help you resolve your taxes, okay? Your tax problems. It looks like I have a question. Hi, Jill. Hi, how are you? That's another accountant. She sent a client to me for tax resolution. I love her so much. Are you still watching? It looks like you have a question for me. What about 401k? My client had $10,000 left in IRA and was rejected even with no assets. I had to draw the rest out. Yeah. So, I mentioned that the other time. I said, yeah, I heard you. Yeah, thanks. I can see you. You're still there. Thank you. So the $10,000, how much was the tax liability? Can you hear me? Type your response if you don't want to call me. Let me know what was the tax liability of the client and how much was the offer, because it's very important. Even though sometimes you have money in your savings account, it's okay. You can still put an offer in, but the offer cannot be less than what you have. If you have access to $10,000, okay, and you submitted an offer for $5,000, of course, it's going to get rejected. Okay, $60,000. Okay, so the person put in an offer for how much? The $60,000, is that the offer amount or that is the taxes? Okay, the offer amount is $1,500. Okay, so the person submitted an offer for $1,500. but has an outstanding taxes of $10,000. Let me write this down to make sure it makes sense. So the taxes hold. Jill, let me know if I don't get this right. So the tax debt is how much? $10,000, right? And sorry, the tax debt is $60,000, right? And the person submitted an offer, an OIC for $1,500. And okay, yeah, the taxes that he owes is $60,000. I got that. And then this offer was submitted for $1,500, and he had $10,000 next to his name, right? This is a very bad offer. I would not submit an offer like this, because check this out. You have $60,000 in taxes that you owe, right? And you want to settle. You're telling IRS, look, I accept the responsibility that I hold this money, but due to my financial situation, due to my hardship, I cannot pay you that amount. And you proposing $1,500, but you have $10,000 in your bank account. It's going to get rejected. The appropriate offer, what I would do is, in this situation is, I would request for, of course, the $10,000 will be part of the offer, because he has access to that $10,000, okay? I would also want to ask, what is the monthly disposable income? Because it's very important. Not only would they look at the asset components, they will also look at your income components as well. When it comes to an offer, they're looking at both. I'm going to talk about the other options that they don't look at the assets, okay? There are several options for your resolution. The OIC, particularly offer and compromise, when you're trying to settle, they will look at your income and your assets. Very important. You can't have $10,000 in your IRA account and you're offering IRS $1,500. It doesn't make sense, because you have access to $10,000, right? If I'm the offer examiner, I'm not going to approve you. If someone owe you like $60,000, right? And they have $10,000 in their bank account, but they're saying, Bernice, can you take $1,500 to eliminate my $60,000? Would you take it? No, because you have access to $10,000 that you can pay me. So which is why it's very important that you analyze your situation very well before you submit an offer. An offer and compromise is excellent. It works all the time. I do it all the time in my practice. But we qualify you to the T to make sure that you're not wasting my time and you're not wasting your money. Okay? So if you have $10,000 in your bank account, let's assume that the monthly disposable income in this case, that's why I refer you the clients. Yes, thank you. Yes, you refer me the clients. I appreciate that. So I'm going to assume that is monthly disposable income, like after paying all the expenses, let's just say it's $50 every month, okay? So before I put an offer in, what I would do is I would first of all add the $10,000 because he had access to that. And I would also ask, does he have access to any other 401k, cash account, other savings? Because you need to tell me everything that you own. If you don't tell me, IRS will find out. And it's also illegal for you to put something on, on a OIC form that is not accurate. So you want to make sure that you are disclosing everything to the person that is helping you with the offer. It was close to nothing for disposal. Okay, so disposable income is close to nothing. Okay, so I'm just going to estimate is $50. Another key component that is important is the set date. When will the taxes expire? The collection statute expiration date is very important because IRS, that's the time that they have to collect after the money that you owe. So if your collection statute, let's just assume, lost everything and trying to raise 2 kids. So do you know like the aging of these taxes, Jill, since you are still here? Do you know when the taxes would expire? Like what is the set date for the $60,000? Let's just assume that you still have about 6 years left. Okay, 6 years. So what I'm going to do is I would take the 6 years times 12, which is 72 months, right? 72 months. And I'm going to multiply that by the $50. The $50 is disposable income on a monthly basis. Multiply the 72 months times $50, okay? Because IRS is going to assume that, for the sake of an OIC, the amount that you're making now, that's how much you're going to continue to make, okay? So that's 3,600. So for the sake of this, for this case, I'm not going to offer anything less than 13,600 to settle $60,000 in taxes, okay? I've had several people that they will pay, tax resolution company because they just promise them, yeah, I can settle, because they want the money. And a lot of them will just take your money. They won't do the proper analysis. It's very important. There are key components that IRS will look at before they could approve you. They just don't give out money like that or write off taxes. No. Okay. Agents said to take out IRA balance and try again next year. Absolutely. That's what they're going to say. But if your clients or whoever had proposed 13,600, what I would do is I would propose the 13,600, but I'm not going to offer that on the spot. Because keep in mind too, if you turn in an offer and you're saying, hey, IRS, here's 13,000. I'm giving you $13,000 and I want to settle the $60,000 with 13,000. They're going to take that money and they will still reject they will reject the OIC if you are not qualified. So when we do the offer, what we do is we'll take the offer amount and we divide that by 24 months. I'm not going to let you have access to my client's money. No. For what? I'm going to give them the bare minimum. Say, this is the condition of the offer. I am offering 13,600 to settle 60,000. However, I don't have the money to give you up front. What I'm going to do is I'm going to spread that over for 24 months. Okay, and you come up with a monthly payment. So while they are reviewing the offer, you'll be paying that monthly payment. So even if they reject the offer, okay, it looks like I have someone calling in. So even if they reject the offer, is that mine? Ume, is that a call for me or for you? I'm on the phone. Oh, you're on the phone. Okay. So even if they reject the offer, you're still not at a loss. Okay, so I don't know, Jill, with this client, when he did the OIC, did he submitted the 1,500 up front? Because what they would do is they would keep the money and tell you to try again next year. Okay, so very important. So those are the components. That's the requirement for an OIC. The other option, not everyone is qualified for an OIC because we have high net worth individuals that are very hardworking, especially a lot of my clients are realtors, real estate agents and investors. We serve heavily in the real estate industry. Thank you. You're amazing. Thank you. You're hard too, Jill. Thank you so much. I appreciate you always. I appreciate all your referrals. Thank you, thank you, thank you. I can't thank you enough. But so what was I saying? So, a lot of our clients are real estate agents, investors, and they are doing very well. I mean, I have some, realtors that make $500,000 a year, sell so many houses, and they're doing well. But they have taxes. They have 6 figures in taxes that they owe, and they can't afford to pay. They can't afford to pay because they don't have the cash flow. Even if they have the cash flow, they don't want to pay under 6 figures and end up on the streets, right? So if they are not qualified for the OIC because of the income that you make, if you make $500,000 on a yearly basis, the chances of you getting qualified, or you have equity in your home that is way higher than what you hold, the chances of you getting qualified is very low. So there's another option. We call that partial pay installment agreements. I tell people a lot of times when I talk to clients, they say, Bernice, why should I hire you to do a payment plan for me? I can just call the IRS and, get it set up. But that's not the payment plan that we do for clients, It's not the regular, the payment plan that a lot of clients refer to when you call the IRS and you say, hey, I have these taxes that I owe and I would like to settle. That is a regular full pay, is what they call it, full pay installment agreement. That's the one that you can set up without having to provide your financial analysis, okay? When you try to set up a payment plan that is affordable, because a lot of times when people set up the payment plan on their own, they can't keep up with it. Thank you for the likes. If you are watching me for the first time and you have questions as it relates to taxes, payment plan, tax debt, please feel free to dial. The number to call is 443-741-4188. I'll be glad to take your call live and answer your questions. I don't like to talk to myself. So if you have any questions for me today, feel free to call and I'll be glad to answer your questions, okay? So back to what I was saying. If you, what was I saying? I lose my train of thought now. Can't even remember what I was saying. Okay, I was talking about the difference between a full pay installment agreement and partial pay. So if you call the IRS and you just get on a payment plan without submitting your financial analysis, your income and your expenses, they're going to set you up on a regular payment plan, which a lot of time is very high. People can't afford to pay that. You will see people will get on a payment plan and after 3 to 4 months, they can't afford to pay it because it's just too high. Okay, so I don't recommend you do that. If you want to get an affordable payment plan with the hope of getting your taxes written off as a result of expired statute, you will do what they call partial pay installment agreement, which is what we do for our clients. I've had clients that, the payment plan that we settled this week that we got approvals for is 3 different ones. I had a client that holds $75,000 and I was able to negotiate $50 for her. $50. She was paying $950 every month and it was so high. She couldn't keep up with it because she had mortgage. She had kids in private school. So we had to do a financial analysis and we're able to negotiate $50. Another client, our total taxes was $65,000. I was able to settle for $20 every month. Okay, those are not regular payment plan. It's something that you have to do your financial analysis. We position our clients to the IRS to let them know that they don't have enough money to pay every month. So we settle their taxes. We negotiate the lowest payment plan possible until their taxes expires. Because there's a set date for every taxes that you owe. Your taxes do expire 10 years, okay, from the date of assessments. So we negotiate the lowest payment plan possible. And when it's time for your taxes to expire, it will just fall off. It will fall off your transcript and you are not obligated to pay that. So that is the difference between the partial pay and the full pay. The full pay is the regular payment plan that you set up that you don't need to provide your financial information. The one that we do is a partial pay where we will position you to the IRS and let them know, show them your income and your expenses and negotiate the lowest payment plan ever possible. I have so many realtors, so many real estate agents that we have helped. And, they really, really, really love the fact that keep up with their monthly payment plan without, any hardship at all. Okay, and they still have the chance of getting hundreds of thousands of dollars written off at the end of their expired statute. So when it comes to a partial pay installment agreement, you really don't need to worry about the equity in your home, because IRS don't care about that. They don't care about the equity in your home when it comes to payment plan. They really don't care about that. They don't care about the cash you have in your banks, okay, in your bank accounts. I have clients that have 6 figures in taxes. That owe 6 figures in taxes. They have 6 figures in their bank account, and I was still able to negotiate affordable payment plan. That's the difference between an OIC and a partial pay installments. Okay, I really wish I can walk you around, at least write something on the board, but I hope you are following me. The tax resolution options, the very first one that I talked about is the OIC, which is the offer and compromise. That's the one that IRS would look at your income, and they will also look at the assets as well. Those key components, you cannot offer an amount. You can offer an amount that is lower than what you hold, but you have to make sure you don't have savings account equivalent to that amount. You have to make sure the equity in your home is not higher than what you are offering the IRS, okay? That's the OIC. The partial pay installment agreement says the one that it really doesn't matter what your assets are. It doesn't matter what your income is. What really matters is what is your disposable income after paying all your expenses. All right, so it doesn't look like you have any questions for me. If you like this video and you find it very, very useful, please give me thumbs up and share this video so other people can learn. Don't keep me as a secret, please. So if you find this video very, very informative, please feel free to share so that other people can also watch. All right. Thank you so much for joining. Thank you. Hi, Yusuf. Hi, Linda. Hey, that's my sister. Hi, thanks for joining. Hi, Adedoyin. Thank you all for joining today. And, I just encourage you all, if you have back taxes, the very first thing you want to do is you want to get those taxes filed. Very important. If you receive notices from the IRS, try not to ignore your notice. Try to respond to your notices, okay? And as we are approaching the end of the year, this is the best time for you to start your tax planning. If you have businesses, you want to get with your accountant to determine what will be your fourth quarter estimated taxes. It's coming up. The deadline for that is January 15th. So make sure you calculate your estimated taxes, because that's why people get into tax problems. They refuse to do tax planning. They refuse to switch. If you have a business that you make 6 figures, you want to consult with your accountant to do tax planning. You have no business filing as a Schedule C. You don't want to file a Schedule C when you make 6 figures in sales. You want to review how you can switch that to an S Corp. By switching to an S Corp, you are saving bare minimum 15%, which is the FICA taxes, the Social Security and Medicaid will not be taxed as an S Corp. Of course, you have to set up a reasonable compensation on your W-2 and stuff like that. So it's a lot of requirements. You want to make sure that you find out and you are well positioned to pay the lowest in taxes. If you have any other questions, please feel free to comment and I can attend to that later. But if you don't, I will be tuning out for the day. I think my 30 minutes is now over. All right. Thank you so much for joining today. Have a wonderful day. Bye-bye.